Mike with Unique Wealth Education, and I am happy today that we have such an unusual guest. We're honored to have Dave Stech. Dave, how are you today?
I'm great, Mike. How you doing, bud?
I'm doing excellent. I'm doing really good. I'm excited to have you on the podcast as, our listeners are going to get so much from just listening to you and, someone that has so much experience and success in general business and real estate. So thank you for joining us. I really appreciate it.
No problem. Happy to be here.
So, Dave, let's get right into it. Let's talk about a little bit about what you've done throughout the years and how you've achieved so much success in real estate. Because when I've talked to you throughout the years and learned about you, I mean, you've achieved so much success. You've done so many real estate deals, so many lending deals, and it's unusual. You are an unusual real estate investor, that's for sure.
Unusual is a word that I've heard more than once in the course of my life, but yeah, I guess I'll just give you a Cliff Notes version of my background. I don't have books or tapes or TV programs. I just spent the first 20% of my life living in a trailer park with two parents who had eighth grade educations, and fortunately, we all wanted more for me. And I was able to, as I call it, escape to college. I went to Purdue University undergrad and later graduated from the London School of Economics. So I had this background in economics, and I ended up going to work in corporate America. And I was at Kodak for a number of years and Disney for a number of years. And the good news is I launched the first disposable camera for Kodak and the first digital postcard for Disney, and billions of dollars were made. The problem was I couldn't get rich. So I had to look for another alternative, and so I escaped and became an entrepreneur. Fortunately, right place at the right time, internet companies and the like, and I early retired 3 times, and then I kind of got involved in real estate. And I started by taking my economics background and trying to forecast what was going to happen. And sure enough, in 2005, I got invited to speak at Harvard, and I shared the State of the Union for real estate investors. And I'll be darned if people didn't believe me that the market was going to crash in 2005, and later invited me back after it had crashed and said, "Now what's going to happen next?" And I said, "Well, I'm going all in Las Vegas." And of course, that didn't go over very well because, of course, foreclosures were rampant in Las Vegas. That ended up leading to my being invited back. And the Cliff Notes version is I've done just about everything I can think of in real estate. Done about 6,000 deals in the last 7 years.
Wow.
And now my son, who is one of the founding partners of the largest hard money lender now in the U.S., is now worth $1 billion. So it's amazing how you can start nowhere. Just a short time ago, and even 15 years ago when I started in real estate, and now have our family doing as well as it is doing. So I'm actually surprised myself. I never expected to be here, and especially starting in that trailer park.
Wow, you are truly an inspiration for so many people who really want to find financial freedom and really have the ability to make something of themselves and create a legacy. And I don't want listeners to really expect that we could all have the success of David Stech, because that's just unusual. You've done some tremendous things, but everyone could achieve success because success is defined differently, and the goal is to maximize oneself. That's a big thing. But what was your first deal? What was the first real estate deal that you've done in your life?
Well, I'll tell you what I started doing back in the early 2000s, when real estate was on fire before it eventually imploded in 2007. I got involved really in investing in pre-construction real estate. So imagine that there was a piece of real estate that you could actually write a contract on in a new development. And let's say it was in phase 1, but you could go to contract in phase 4. Well, I did that in some very hot markets where I put down $500 earnest money checks and didn't have to close on the deals for 3 or 4 years later when the home was finally built. Meanwhile, I would go to contract, let's say for 100,000, and by the time it was built, because business was booming and real estate was booming, it would be worth $200,000, and I literally would assign the contract that I had only put $500 into and make 50,000 or even more.
Wow.
And it was almost like cheating, only legal. And once I realized I could do that back in the early 2000s, in 2011, when we were at or near the bottom of the market and builders wanted to build, but they couldn't get construction financing, I came in and wrote more purchase agreements for them, put down earnest money, and did the same exact thing. The point is that that's just one strategy I was able to use 2 times at different points in the market cycle over the 15-year period that I did it. And imagine just writing a contract, putting down $500 or a $5,000 check, and then waking up in 3 or 4 years when it's ready to be built, never owning the property, just assigning it to someone else and making $50,000 or $100,000. It was crazy. I'm thinking, how easy is this?
Amazing. It's like you're taking advantage of the market in every segment of it. Even when it's down, what you're doing is you're assigning a contract. Essentially, you're wholesaling a new construction home, and that's market timing, I would call it. And that's amazing. That is amazing.
Yeah, and to your point, if anyone ever asks me, well, what are you? I mean, I'm a private lender. We do thousands of deals. I'm a real estate investor. I've done that. But really, I'm a market timer. I mean, at the end of the day, I know what to do at each quarter in the football game called real estate. And the strategies change all the time, but the overall objective and desired outcome is always the same. Everything you ought to be doing, in my opinion, Mike, everything I ought to be doing, everything everybody on this call ought to be doing is trying to add a zero.
True.
I don't know where people are in their real estate careers or even in their life, but let's say they're making $20,000 a year. If you could add a zero and make 200,000, that would be a great day.
Absolutely.
If you had 50,000 in the bank and you could add a zero and have 500,000, the point I'm making is that all of us should be focused on just adding a zero. And then what do we do when we get there? Just add another one.
Absolutely, and that's that's the goal when we're doing our real estate deals and in business. So you talked about market timing, and that's one thing that I've getting to know you, I've heard you talk about a lot, and I think that that's one of the keys to success is knowing where the market's at and how to take advantage of the market in every point, and also to change with the market. Don't let the market change you. So I look at it like, with you knowing all this information, I look at you also as a data specialist. And we've talked about MSAs in the past. And I ask you, where's the market going? A guy like you that has got up there, spoken at Harvard, and made the right moves at the right time throughout the last 20 years. Where's the market going now?
Yeah, it's a great question, and I get that question all of the time. And here's what I'll tell you. The market, here's the good news. The market is not going to crash like it did in 2007. All the financing and other things that led to that crash just aren't in play right now. But it is going to correct, and it's already correcting. In fact, over 100 MSAs, which are called metropolitan statistical areas, which are populations in markets that are over a certain amount or above, over 100 out of 400 are in decline. Now, are they collapsing? No, but they're correcting.
Sure.
And my whole perspective is that if you know that information, then you can get in front of it. If you don't know it, you end up behind it. And people always ask me, what's more important? Should I get in the market at the right time or get out of the market? Which is the most important one? And without a doubt, far and away, the most important thing to do is get out of the market at the right time. Because when the market bottoms out and you're at or near the bottom, all you need to do is get in a little late and you're fine. But if you get out a little late, you're on the wrong end. You may or may not know this, Mike, but in the California market in 2007, when it collapsed, it dropped 59% in 21 months, which is roughly 3% per month. So you don't want to be on the wrong end of something like that. So we're now at or near or past the top. We're not at or near or at the beginning of the bottom. And so people need to be smarter about what they do. They need to be around people like you who've been there, done that during different market cycles. And that's why I always suggest to people that the most important thing in their real estate career is going to be the people that they're aligned with, because fewer, deeper relationships with fewer, better people on fewer, bigger deals are how we've really been successful.
I agree. I agree with you totally, because I believe, like they say, your network is your net worth. I believe that to be true, and who you surround yourself with is very important. And one of my questions was going to be to you, because market timing is so important, is how does the average real estate investor, or the new real estate investor, or the advanced real estate investor, learn about data? But it's all about indicators. You just said that if you look at the market trends in California, and you look at where it was in 2007, 2008, and you look at where it's at right now, and you look at other MSAs around the country, those are the indicators. I mean, the market is predictable in a sense. I mean, no one could exactly tell you how much and how much is, when and how much it's going to go down, but there's indicators when something's going to happen. Is that correct? Am I saying that the right way?
Yeah, what I would say is the principal drivers in any market are economic and housing market factors, and they vary by market. There's no market that's created like another market.
Right.
They're all impacted by different employment scenarios. I mean, look at San Francisco Bay and technology. Where do you have a market like that anywhere else in the U.S.? And the answer is you don't. So right now, prices in San Francisco, get this, they're 60% higher than the peak in 2007 at the time that it crashed. And yet they're 60% higher and still going up right now. It's crazy. In fact, San Francisco is having several IPOs this year with companies like Uber and Airbnb and Lyft and others. They're expecting to produce 15,000 new millionaires in San Francisco just from 4 different IPOs that are happening this year. Well, where are you going to find that? In Detroit, right?
Right.
That's just not going to happen in Michigan. So every market is very, very different. And there are certain states I like and certain states I don't. But I tend to like the states that everyone else hates. So, for example, I love California and Florida and Arizona and Nevada. Why? Because they go way up in value and they go way down in value. And they go way up and they go way down. And I know when it's going to happen. I'm not saying I'm perfect, but the whole perspective around estimates is that they're always going to be wrong. The question is by how much and in which direction. And fortunately, we've always been right in the right direction and off by a little in terms of our forecasts. So that's how we've been so successful. And, we've done 6,000 deals and only lost on 7 of them. So
Amazing.
If you write 99.9% of the time, that's okay.
Absolutely. Absolutely. Well, one of the things that you're saying here is so helpful, because, like I said earlier, that there's a correction happening or coming, in every market's different. So one thing that's important is to be able to play defense the right way and be ready for downturns, because I think that's when real estate investors could actually make the most money, right? Is when you're buying, at or close to the bottom, or when it's at the bottom and curving up. So I think that's really an important tip that you're giving the listeners here and myself, which I've learned a lot from you by hearing this.
Yeah. Well, and at certain points in the market cycle, when you're at or near the bottom of a market cycle, where do you want to be? You want to be in one of those markets that goes up 20% a year when it does recover. By
Sure.
contrast, given where we are now in the market, markets that you're in right now, which are more stable markets, are markets that people ought to be looking at in order for them to have stability and cash flow as opposed to appreciation. You
Sure.
know, when we're at or near the bottom of the market, and of course, I chose Las Vegas as our primary market during this last turnaround. What was I looking to accomplish? Well, there are three types of appreciation. Most people think of market appreciation, but there's instant appreciation where you buy something for less than it's actually worth in today's dollars. There's forced appreciation where you actually rehab it and you add more value than you thought you were adding, or at least that it was costing you. And then there's market appreciation. Well, imagine investing in Las Vegas as we were in 2009 and 10 and 11 and 12. And now all of a sudden the market takes off and you've got instant appreciation because you bought right, forced appreciation because you rehabbed a property, and then market appreciation of over 20% a year.
You,
How can you lose in a deal like that?
you get a situation that you're in, which is dynamite. It's incredible. You really hit it really big because you went in big there, and what was the outcome? Incredible returns. And that's amazing to know. So, listeners, if you just listen to that, you have instant, forced, and market appreciation. Those are the three types of appreciations that you can have in real estate. And like Dave said, he had them all in Las Vegas because he timed the market right.
Yeah, identify the right market. There's 400 of them in the US. And if you get the right market, honestly, Mike, you can do everything wrong and still make a fortune. As we always joke that the most important thing to do in real estate, there's when to, where to, what to, how to, and with who. And if I had to pick any of those five, it's always when to. If I can get the when to right, everything else is going to fall in line.
I
The
agree.
second most important is to get the where to right.
Right.
So imagine investing in 2011 in Las Vegas, the number one market in the US, and we did. And sure enough, the what to, what we do in terms of rehab versus buy and hold versus options versus all of that is secondary if you get the when to and the where to right. And as I always say, if you can get that appreciation thing right, if you can get the three types, instant, forced, and market appreciation right, then you make three types of money: obscene, ungodly, and embarrassing.
Wow.
And that's what we were able to do.
That's amazing. That's amazing. So, on the next downturn, or the next correction, how are you going to determine what market you're going to go in? Some of the factors, is it like you said, the economic factors, what businesses are going in there, where the housing stock is, do you look at, city plans, state plans? How do you decide what market to go into?
Well, I can tell you, if I had to cut to the chase, I'll just make it easy for everybody on the call. What is my favorite market for the next decade or more? Florida. And it's Florida not because of hurricanes, trust me. I had 146 loans in Florida when Hurricane Maria or Hurricane Irma came through. So I was nervous. Not that we didn't have insurance on all the properties, but imagine trying to rebuild 146 homes
Sure.
because you ended up taking them over for some reason. So why do I like it? Well, it's purely demographics. If you look at the number of caregivers, I'll just give you one metric, Mike. I could bore you with this kind of data.
Oh, no, this is not boring. This is actually informative, and this is what listeners want to hear.
Well, imagine this. Right now in Florida, based on the number of elderly folk, and I'm talking about people who are 55 and over or 65 and over, there are roughly 2 caregivers for every person. In other words, not real caregivers in the specific sense of the word, but with a medical profession that has to support that demographic, there are roughly 2 people. As they age 10 years, the 2 people who needed to support them grows to 7. So imagine that you're in a market where there are a lot of retirees, baby boomers that are moving. And now you're in a position to be able to take advantage of that market by renting properties. So you buy now and you rent to medical professionals, not doctors and other people, but nurses or caregivers. You will always have a constant stream. First of all, you probably won't have tenants moving out as long as they're happy doing what they're doing, but there'll be more and more and more of them necessary. And so Florida is my number one market for the future.
So are those are you would you be renting them out to assisted living centers or small assisted living houses? What do you mean when you say the caregivers? Is it more assisted living?
Well, here's what I'm going to say. The reason I gave you one simple example is because if I gave you 10 examples of why I like Florida, it would be very confusing.
Sure,
But that
sure.
one example I gave you led you to ask a question that's a great question. So let me see if I can answer it. Have you ever heard of RCFEs, Mike?
Um, I have heard the term before, but I'm not sure exactly what it is.
Okay. It's an acronym that stands for Residential Care Facility for the Elderly.
Okay,
Basically, it's buying three bedroom, two bath homes and renting them by the bed, 2 beds per room, to people who are elderly folks. Not necessarily a nursing care
sure,
situation where you have dementia, not necessarily even assisted living, but how about independent living? So,
absolutely.
what if you could rent the house by the slice instead of renting the whole pie? In other words, the home.
Your
Well,
return would be through the roof.
yeah, think about this. Would it be reasonable for an elderly folk or person to live in that home and spend $1,000 a month? I'm just rounding the number.
Absolutely.
I mean, you know, and I know there are people who are in assisted and independent living that are spending thousands a month, right?
Yes.
So let's say you rent it to them for $1,000, and let's say it's a nice home. In Florida, you can get a nice home for $250,000.
Sure.
How would you like to have 6 beds producing $6,000 a month on $250,000 home in a nice neighborhood?
I think
That
that's an incredible return. Just by thinking about it, $1,000 is very reasonable, and you have six people in a nice house in a nice neighborhood. I think that's very reasonable.
Yeah, you and I always talk about the 1% rule. If you're going to buy a home for $100,000, you want to generate at least 1% of that on rent every month, so $1,000 a month. Well, what's the rule in the case of a $250,000 home that you rent for $6,000? It's like the 2.5% rule. It's almost ridiculous in terms of the margins that can be made. And that's the demand that we're going to have in Florida. Now, I've done these residential care facilities for the elderly in California before, and they're ridiculously profitable. But that's just one thing that I hadn't planned on talking about. You hadn't planned on asking me.
Absolutely.
But the good news about real estate is there's so many ways to make money. The bad news with real estate is there's so many ways to make money. And you can go down all kinds of paths and chase so many shiny objects, but you really need to know people who know. And I always tell my kids this now. My sons are adults, but I tell them, stop reading books. I know everybody else tells you to read a book and rich man, but all of that stuff. But instead of reading books, why don't you just call the person who wrote the book and get the answer and save all the time reading the book? And that's literally what I think what I think people ought to do. If they're going to do something like what you're doing, they ought to call you instead of trying to read about it for the next, I don't know, months or years or trying to learn about it. Just call the source. And that's really an important thing that, you obviously have done an awful lot yourself. You're very accomplished. If people want to know something, call you. By the way, don't call me.
Well, well, the thing is, I feel blessed to, have built a relationship with you, and have had so many conversations, and really on those calls, I'll tell you, I pick up something new from you on every call. I really do, And I feel that, you could have 10 or 20 books out there, no doubt about it. I feel that you go out there and have done so much, and, you're not the guy that's going out there and having, TV commercials and books and whatnot, but you can, but you obviously choose to, do your business in a different fashion. And that's, that's pretty impressive that you just stick to your investing. And, we've talked about it. I said, Dave, why don't you, if you had a conference, you'd have 1,000 people there. People want to learn from you. And, I'm just very blessed to be able to have communication with you and built a friendship with you, to have learned a lot from you. And you get on the call is, means a lot to a lot of people. So we really appreciate that. Let me ask you this. Someone new or that's in the business, how would you advise them to get started or improve themselves in real estate? Because, I feel I'm very similar to you. I'm not a big book reader. I'm a doer. And I know there's people that, read so many books, and that's great. Don't get me wrong. That's excellent. But I feel like in my career, I started young. I started, at the age of 20 years old, and I just jumped into the business. And I met a lot of people, and I was like a sponge. I talked to a lot of people. But nowadays, a lot of people are out there reading books, going to seminars, getting coaches, getting mentors. What would you advise for someone that isn't like you and I, who aren't big book readers? What would you advise for them to get started in real estate or improve their real estate?
Yeah, I think the first thing I would do if I were starting over, and when I think back at how I got involved in real estate, I went to local RIA meetings, and I listened to speakers because I didn't know what I didn't know. And so I listened to people who knew. But I quickly realized that the people who were in the RIA meetings, most of them were dreamers, but they weren't doers. And so those weren't the people I wanted to hang with. I really wanted to hang with the guys that were on the stage, that were talking about what they did. I was also not as interested in the people who were trying to sell something at the back of the room as the people who were actually investors, not people who talk about investing, but people who actually invest or who actually lend. And so I quickly got to the point where I created what I call a fewer better group of people in my life who had forgotten more than I'd ever know about real estate. I mean, I had no idea what I was doing when I started out, but I figured out pretty quickly that they knew. And so I think the most important thing anyone can do is find people who are extremely successful in real estate in order to figure out what it is that they're doing. It's kind of like the question that I often ask my sons. If you could work for Warren Buffett for free, would you do that, or would you work for somebody else for $50,000 a year who wasn't that bright? And the answer is, I would work for Warren Buffett for free and eat ramen every night for meals if I had to, in order to figure out, some people call it brain picking. I'd like to take you out and pick your brain. I call it skull sucking.
Yeah.
It's basically, Mike, you're a wealth of knowledge. Look at all the businesses that you've created and all the success that you've had. But guess what? You haven't done everything right, and you haven't done anything perfect. But at the end of the day, you probably, like me, learned more from the things I did wrong than the things I did right if I'd only picked up the phone, or if I'd only networked with somebody who was already successful. It's kind of like this call. We had no agenda going into this,
Sure.
but all of a sudden we're having a conversation about residential care facilities for the elderly. I can promise you that there's almost no one out there that even knows anything about those. And that's how I have a competitive advantage, because I do everything that other people don't do. Everybody else is running around doing things, and I'm trying to do the opposite.
Dave, you're just, you impress me so much, and I just can't get enough of talking to you. And you obviously have so much time, and you're busy with your life and your wife and all that good stuff. And it's so refreshing to hear and talk to someone on on a regular basis like you that that just is such a visionary that really sees opportunity where other people don't see opportunity. You've seen an opportunity in Las Vegas, you've seen an opportunity in California to own homes and parcel them off, and you're mentioning that in Florida now. But you are just you're just such a breath of fresh air for people to listen to, for me to listen to, and to learn from. And I strive to learn more from you. And it's just great to hear some of the advice from one of the great investors that I've ever met. That's I'm thankful for that. Dave, I appreciate your time. I know that I said I'd get you on for a call for just a little bit, and I want to respect that because I know you got a lot going on. So I just hopefully in the next 6 months or a year we could have you back on, and maybe we could talk about a particular topic because I know listeners are going to be emailing me and they're going to be saying hey Dave is incredible, and does he have any events, how can we learn from him and all that good stuff. And I'll tell him, hey, he's going to be on a podcast in the future, and Dave is a giver. He's done so well in his life, and not only financially. Dave is has made an absurd amount of money. I mean, he's a incredibly wealthy, but his also biggest wealth lies in the children that he has educated and has helped make incredibly successful through his education of them, through his care for them. So I also, Dave, that's one thing about you that I highly respect, is that you really focus on your children so much, and you talk about legacy and leaving a legacy. And you talk about last time you and I were on the phone, I think it was a week or two ago, you were talking about your grandchild. So I see that wealth to you is not only financial, but it's also your family, which is so important in the legacy that you leave behind.
Well, thank you for saying that. And it's really important for people on this call to hear that. I often tell people all I ever wanted when I was living in a trailer park for the first 20% of my life is I wanted two things. I wanted to be a millionaire. I didn't know what the hell that meant. I just knew I wanted to be one. And then I also wanted to be a great dad. And you can be a biological father. That's the easy part. It's actually the more fun part. But being a great dad takes a lifetime commitment. And I remember giving up my senior management position at the time with Kodak to move from New York to San Diego and start walking my kids to school every day, both ways, and building a career around them. I coached them on 30 or 40 of their teams. And I tell everybody this because you've got to decide what is the singular most important thing in your life. And I can tell you without a doubt, if I ask everybody this question, they may give me a different one-word response, but all of it would be it would be under the umbrella of family. That's our why. That's why we do this stuff. I had a webinar last night with my son, who's built $1 billion company with 3 other founding partners. That's crazy.
Absolutely. Absolutely. And you wanted to be a millionaire, Dave, and you're in the B's, so, and you're talking about B now, billionaire. So, it's just incredible, Dave, that when someone strives for what they want and they really get educated and they have a desire, but you could have all that, but also, Dave, I also say you have it. You have the it factor. There's some great athletes that had that. Michael Jordan, Kobe Bryant. I refer to basketball a lot because I love it, and my name's Michael Jordan. But you do have the it factor in business. You're a data guy. You understand it. You know how to put things together, and that's something that to me is also you can't just teach. But you have it, and I respect it so much because you not only have it in business, but you have it in life.
Well, I appreciate that. It's funny. The webinar we did last night was for 74 people. in order to qualify to be on that webinar, you had to either be a multi or a decamillionaire. In other words, you had to either have a net worth from 2 to 9 million or from 10 to 100 million.
Wow.
And it was all for people who had become that successful and had children. And the whole idea was, or the whole concept was, and the reason that we were speaking to them was because we were invited to talk about our journey from zero to where we are today. And imagine, how far I've come, and then imagine how far my son and sons are taking it from there. It's crazy to think what a difference one generation can make. And I've told my kids, I was able to generate 8 figures of net worth. All you have to do is add a couple more and you're a billionaire. So that should be pretty easy. It was really tough to go from 0 to 8 figures. And so at the end of the day, it really is cool. And I also mentioned, and I think there are 2 things that I would share with you in case we're running out of time that I think are important for your listeners. And one is there are 6 filters that we use with people, because people are the single most important thing in your real estate career. Because deals don't do deals, people do deals. So what are the 6 filters that we use? Number 1, we don't work with people with uncontrolled greed. We all want to make money, but uncontrolled greed is a bad thing. Number 2, we don't work with people with uncontrolled egos. Number 3, we don't work with people who can't be implicitly trusted. Number 4, we work with people who play to win. Number 5, we work with people who are great at what they do, like you. And number 6, we work with people we like. And people always say, I did this presentation on this subject in 2014 at Harvard, and people ask their questions from the audience. And one guy says, well, how do you find anybody like that? And I said, it's not easy, but when you find them, they're like gold. How many Mike Jordans do you really need in your life to be successful? One will be great, but what if you had a few? Then you can't fail because you've got yourself surrounded with great people.
That is such a great compliment. I really appreciate coming from you. It's an amazing compliment. Thank you very much for saying that, Dave. I really appreciate that.
My pleasure. And then the other thing that I'll say again in the interest of time is have the courage to be contrarian. If you look at the statistics that are published by the Social Security Administration, out of every 100 people who are about to reach the age of 65, 53 are broke and 38 are dead. So think about that. 91% of people are either dead or dead broke. Well, here's an idea. Don't do what they do, because that's going to get you in the same spot. So only 1% of people are wealthy. In other words, in the millionaire or multi-millionaire or above status. Figure out who those people are and do what they do, because they generally do the opposite of what the other 99 do. And so have the courage to be contrarian. And that's what we've done from a timing standpoint, is we get in when other people are getting out, and we get out when other people are getting in. And so just simple things like that will make all the difference in your life.
Well, this has been incredible, because, you've given out so many great nuggets that, listeners can, learn from, and, just little things such as, market timing. That's something that you talked about, building a relationship with successful people, being in close proximity to them. And then also your standards for who you work with. Those are 3 things that, to me, if someone took away from this, podcast, are very powerful, and things that can really help you really in a lot of things. Maybe timing, isn't useful in, a certain type of business, but coaching and mentoring is, or being around the right people is, or, being around people who don't have uncontrolled greed. That's in anything. That's, really, that's, you want to be around the right people, the people with, that don't have uncontrolled egos. This is these are very important tips that sometimes people need to hear. And that's the way to become the most successful version of yourself you can be, is when you learn from people like yourself, and plug those things into your knowledge and make them work for you.
Yep.
So this has been great. I like you said, it was just when I asked you to join this podcast, just a natural conversation, and as always, it's it's hit out of the park, as I say, because you're just you're a wealth of knowledge and a great person who I'm glad to call my friend and I highly respect.
Well, I appreciate that, Mike. And as you well know, the reason I'm on this call is because of you.
Well,
And
thank
by
you.
extension, other people benefit. And I do hope that if anyone's listening and has gotten this far in the call and you're still listening, if you've found some value in this, thank Mike, because it's him. It's the reason that I'm on this call.
Well, Dave, that's very kind of you. That's very kind of you. I take that to heart, and we're going to build our relationship even further than we have it. And I'm glad to call you a friend, and hope to see you soon. I know I'm going to be seeing you soon, so I look forward to that as always. And thank you again, and hopefully we'll be talking to you soon.
Likewise, Mike. All the best to you and to everyone on this call.
Thank you very much, Dave. Thank you. Have a great day. Bye-bye.